This is week 8 of investing every week in the stock market. I started this video series as a way of documenting my journey in the stock market and as a means of motivating others to stay consistent as well, or maybe even start investing. This week is a huge week for me. I just got paid a bonus, so I have $5,200 something to invest. Plus, I also made some sells in my other accounts to consolidate my portfolio, which we'll actually get to later. My first buy, as always, is going to be in the S&P 500 through this ETF called USSL. The S&P 500 is an index that tracks 500 of the biggest companies in the United States of America. Tech, banking, financials, insurance, consumer goods, healthcare, anything that you can imagine is included in the S&P 500. The historical returns are great at around 10% on average, and I make sure that every week I invest in the S&P 500. This ETF USSL is actually a leverage ETF. What does that mean? It basically means that the returns are magnified. USSL has 25% leverage, which means that if the S&P 500 goes up 10%, this ETF is going to go up 12.5%. The opposite is also true though. If the S&P 500 goes down 10%, this ETF will go down 12.5%. The pros and cons are there, but for a long-term investor like myself, I think a couple $100 in a leverage ETF, particularly a modestly leveraged ETF, it's not 2 or 3x leverage, is a fair bet. So I'm going to go ahead and buy 8 shares of USSL, submit the order, and done. My next buy is going to be in the NASDAQ 100. Much like the S&P 500, the NASDAQ 100 tracks 100 of the biggest companies in the United States of America. The only caveat is that this ETF is extremely tech-focused, since Apple, Microsoft, Nvidia, Tesla, etc. have been massive returners over the last few years. I think tech is going to create massive value in the future as well, with forward-looking industries like AI and data being primarily tech-focused, which is why I choose to invest in the NASDAQ 100 through this ETF called QQQL. This is a new buy for me, and I want to buy this because this also has that slight leverage that USSL had. So any returns in the NASDAQ 100 for me are going to be magnified by 25%. Looking at the long-term growth rate of the NASDAQ and the US economy, I think it's a safe bet. So I'm going to go ahead and I'm going to buy 20 shares of QQQL, submit the order, done. My next buy is going to be in the S&P 500 without leverage through this ETF called VFV. Investment philosophy is extremely simple as USSL, and you'll notice I'm spending way more money here because I am more of a risk-averse person. Even though I invested in a leverage ETF, most of my money goes into boilerplate ETFs. Unfortunately, I'm not that exciting. 6 shares of VFV or the S&P 500, queue the order, and done. My next buy is going to be in HEQL. This is a leverage all equity ETF. What does all equity mean? This essentially means that it holds not just the US market and the Canadian market, it also holds a slight proportion of the international market. You will notice most of my portfolio is US-centric and Canada-centric, since I do believe the US in particular is going to be a juggernaut in the future. I do think it's good to have some international exposure, and that leverage element, once again 25%, recoups some of those lost gains. So I'm going to go ahead and place an order for 18 shares of HEQL, queue the order, and done. I want to preface the next buy with this information. I actually ended up selling all my shares of BCE and TELUS because I want to move out of individual companies into tracking indices in particular. The purpose of these investments was to take part in a dividend yield, but I realized the stock price appreciation is practically not there, and with high debt costs, I don't think TELUS and BCE are going to be good returners in the future. For a young investor, I think ETFs are the best way to go, so I want to repurpose this money into an ETF that provides income, which is why I'm going to take those proceeds and invest this in QQCL. This is a covered call ETF that tracks the NASDAQ 100. Most of my money are in ETFs tracking the S&P 500, NASDAQ 100, TSX 60 major indices. I want to invest in covered call ETFs tracking the same indices to get some of that income. Now, I understand that a lot of the potential growth might be sacrificed, or I should say some potential growth might be sacrificed. For me, the motivation factor of seeing income come now at these yields is a good enough reason to invest some of my money in these ETFs. Couple that with the fact that I think the NASDAQ 100 is going to outperform Bell and TELUS by a mile going into the future. I think this is a good investment. The investment philosophy stays the same, plus I'm adding more growth when compared to Bell and TELUS. So I'm going to go ahead and buy 65 shares of QQCL, queue the order, and done. Speaking of the NASDAQ 100, I am going to pair that QQCL and that QQQL buy with a boilerplate NASDAQ ETF in HXQ. Investment philosophy is extremely similar. I think the NASDAQ is going to provide good returns in the future, which is why I'm going to go ahead and buy 6 shares of the NASDAQ 100, queue the order, order, and done. My only American individual company buy in this video is going to be Microsoft. Microsoft has done extremely well in the last 5 years. As you can see, it's up 186%, but I think growth catalysts are there in the future as well, specifically in its partnership with AI partners like NVIDIA and particularly OpenAI. The Azure OpenAI partnership is going strong, and if they can actually figure out how to monetize this properly, it's going to unlock an even bigger revenue stream for them in the future. Not to mention sticky products like the Microsoft Suite, Microsoft at Work products, and Azure as a whole doing extremely well in the future. So I'm going to go ahead and buy 1 share of Microsoft, submit the order, and done. My last American focused buy is going to be in this ETF called HYLD. This is a Hamilton ETFs product that is a covered call ETF tracking pretty much the S&P 500. The S&P 500 we've covered before, covered call ETFs we've covered before. Motivations are extremely similar. Take part in that modest growth, but get that income now as well. As you'll notice, I'm not going to invest a lot of money in this, particularly because I think I am a growth-focused investor, although the income, like I said, keeps me motivated. So I'm going to go ahead and buy 35 shares of HYLD, queue the order, and done. My next buy is going to be in the Canadian market through this ETF called BDY. The Canadian market has taken a hit in the last week. As you can see, it is down 3%, and forward catalysts don't look good because the government is in shambles pretty much. There is a lot of uncertainty when it comes to the business and macroeconomic environment. The economy is sluggish, but I do believe in the long-term potential that Canada holds, particularly its natural resources, its ability to attract labor, and for me, more importantly, its proximity to the United States in getting some of those offshoot business and technological contracts as well. And for those reasons, I do invest a part of my money in the Canadian market. Since living in Canada, I do want Canada to do well. So I'm going to go ahead and buy 10 shares of BDY, queue the order, and done. My next buy is going to be in HDIV. This is a covered call ETF tracking the Canadian market, also with some US financial exposure. Investment logic is extremely similar as HYLD. I am buying the index on its own. I just want to pair it with the covered call ETF to extract some of that income now. As you can see, it has returned 10% over the last year with that 10% yield, giving a total return of around 20 to 21%. Pretty decent. So I'm gonna go ahead and buy 20 shares of HDIV, queue the order, and done. With the remaining money in this account, I'm just gonna buy more S&P 500 through VFV, queue the order, and done, and also spend the rest of the money on VDY. 5 shares of VDY, queue the order, and done. I still have $43 left actually, so I'm just gonna go ahead and buy a share of QQCL and a share of HYLD. Perfect. The last account that we need to handle is the RRSP. I actually ended up selling Pfizer in this. Pfizer is a stock that I bought in the hopes that it is going to recover. It was beaten down after earnings. My hopes were shattered because I realized we are never going to see those highs because there's unfortunately no positive catalyst for Pfizer as such in the future. I decided to sell, and as I said, I want to focus more on ETF investing. The focus for Pfizer was to take part in that dividend. I am just going to invest this in an instrument that I think is going to be better for this, an ETF tracking the broader market, particularly QQCL. So queue the order, and done. Oh, and one last thing. In another account, the FHSA, I also sold all of my BCE and TELUS like I mentioned, so we have around $400 left. And with this, I'm just going to be safe and invest this in the S&P 500, since I think that the S&P 500 is going to be good. Even if I want to withdraw this money a year or two down the line, since this is an account for first-time home buyers. And with the other $250, I am just going to buy HEQL. Review the order, submit, and done. Now the TFSA actually has $81 left. I am gonna go ahead and just invest this in VDY. Actually, I can only invest one, sure. Submit the order, and done. $32 left. I am going to buy HEQL, 1 share, review the order, submit the order, and done. $4 left. The only thing left is cryptocurrency. I have $50 here, so I am going to go ahead and just buy Ethereum. Ethereum has a good ecosystem, a lot of developers developing on Ethereum. And I also like that Ethereum gives me rewards for staking on the blockchain. If you're interested in staking, I will leave a link down in the description. But for now, I'm gonna buy $50 of Ethereum, queue the order, order, and done. So that's it. Those were my buys and sells for this week. A huge week for me, some changes, plus $5,000 to invest from my bonus. Incredible. But the biggest thing is staying consistent with your stock market journey. There's weeks that I invest $100. You can literally go back and watch week 3 or week 4, and some weeks where I get to invest this much money. The lesson I've learned is to stay consistent and take part in investing and not let your money stay on the sidelines. I hope you enjoyed this, and I'll see you in the next one.